Hey there, pro traders, and welcome to our Monday market review, where yours truly and Giffen will give you a rundown of what happened last week, and of course, an analysis of the markets that we're looking at in terms of trades that we either are in or looking to get into in the week ahead. So, as always, if you're enjoying this material, please hit that like button, and if you're not already subscribed to our channel, make sure that you do. We bring out professional training on a regular basis. We've got some big surprises coming up as well, or treats for you folks who are subscribers. Make sure you hit that notifications bell so that you don't miss out on those. All right, so the theme of last week, I'd say generally, was quite a big retracement across many of the pairs that we were trading, certainly on the yen pairs, where we'd had the opportunity to get back into that yen weakness across many of the yen pairs. But apart from that as well, there was Friday where the majors and the minors really started moving generally in the opposite direction, but it's given us an opportunity to get some trades on the lower time frames. And a lot of what we're going to be talking about in the months ahead as well is how to trade those lower time frames. All right, so let's start with the euro US dollar here on the weekly time frame. I've progressed this analysis a little bit this morning because we were expecting with that high test and a marginal retracement wave, but nevertheless continuing to close outside of our HDC channel. It literally was a retracement by a few pips on both the high and the low of that candle. And with that low close giving us that inverted hammer, the bearish resumption this morning was pretty much expected. We also took a daily impulse on this on our live account. So those of you who are trading the daily impulse should have seen this. It's a class 3 setup, has to be said. On the, I beg your pardon, it's a class 2 setup. We did have a class 2 setup over here with this wave being below the XA leg and closing outside of it. So nice class 2 setup, in fact, with that bearish impulse candle on Friday. So perfect for us to short this market first thing this morning. And so far that seems to be doing pretty well. So it's somewhat early days for trading this on the H4 time frame, but perhaps for those of you who are a bit more aggressive and are happy to simply trade outside of the channel, then you would have been looking for that. Obviously, it's not a class 1 M pattern, it's a class 2, as I mentioned, but you may well have been looking to trade H4 impulse on this on the lower time frame. So we didn't do any of that, but if you had, certainly, let's just have a quick look again. You would have been interested really only in trading in this bearish move over here with that H4 impulse. Obviously, this is that daily impulse that I was talking about. If you were trading the hybrid as well, then it's certainly a setup here on the 22nd. So that was Friday at the close of the 8 p.m. candle, so midday on Friday. You would have been able to short this with a hybrid. And of course, if you are a trading the H4 impulse, you would have shorted the market here. Let me actually just put that in for you so you can see where it is. That would have been your entry, and that's what time was that? This morning at 8 a.m. You would have shorted this on an H4 impulse. Nice trade over there. So absolutely, why not? So you could have taken both of those. In fact, no reason why not to. They are different strategies. All right, so that's just an example. It's nice to be able to trade the euro again. On the pound, the GBP weakness is more pronounced than the euro weakness. So here on the weekly time frame, we were very much already into that bearish impulse wave. Last week's candle giving us that bearish impulse, strong impulse candle. So in a trend, yes, established trend as well in an impulse wave on this time frame. So a lot of the boxes here are ticked. In fact, the only one that probably isn't ticked, as I mentioned in the last couple of weeks, is the fact that our C close on this is inside the HTC channel, even though it is only marginally so. So there's very few people who are that conservative that they would require that as well. We've mentioned before that we've tried to jump into this with a bearish hybrid on the daily time frame. A week ago, I mentioned that one got stopped out at break even. Look, and now we've got this resumption on Friday with really the bottom falling out of it, not giving us an opportunity really to trade this. You could obviously have taken used an ATR stop and got into this morning. As always, if there's a bit of a gap, you want to just take advantage of the limit order and your stop would have looked something like that. So remember our take profit, if you're using a standard targeting, your take profit would be in that region over there. So also well on its way, and of course another nice candidate this morning for H4 impulse as well. So that again is just our daily stop. Let's just take that visualization off on the H4 time frame. So this one has literally just been going. There has not been a single pullback, and that is something that we do wait for. If you are trading intraday time frames, this will also have been keeping you busy this morning. So interesting for a Monday morning, but then those comments from the Fed last week really got the market going. So we don't care why, as long as we have volatility. Volatility is our friend, right? Dollar yen weekly time frame. We've still got a bullish impulse candle for last week. That impulse wave on the weekly time frame continuing nicely. Here is the daily time frame, however, where you can see that through the course of last week, in fact, Wednesday is when it started, we had that correction. So now this is still technically in the same impulse wave. These are just inside bars at the moment. So until we get a lower low, this wave will be treated as a continuation. We may well get a lower low, in which case we'll be able to ring that high, and then that'll take this off of the table completely for trading those time frames. But at the moment, we also remember we look for a valid pattern, and we have our remaining criteria that need to be met. So this at the moment is getting a bit messy over here. But if we had a bullish impulse candle, and you're happy going with that, then that also would potentially be a setup to look at through the week. But as you can see, just looking at our US dollar pairs on the euro and the pound, there are other things potentially for us to be looking at, so we can turn our attention somewhat away from the yen pairs. Right, yes, dollar Swiss. This trade is actually in a trade here already. So as always, I'm showing you one of our members' trading accounts. This looks like it must have been an H4 impulse. So just going back quickly to the weekly time frame breakout. Obviously, if you're a channel trader, you're treating this as a trend, even though we've only got one phase one outside of that HTC channel. That's fine if you're a channel trader. And here on the daily time frame, you can see likewise we are well outside of that channel. We haven't had a pullback for a daily impulse. That's why there isn't one. But as I say, that's a very nice bullish impulse wave to trade on the H4 time frame. Looks like this was the entry. That would have been 8 a.m. on Friday. So stops already been trailed somewhat. Their initial risk being 0.25, about $260, I would imagine. So they've chopped about 40% of the risk off of that. And if we get a higher close at the end of this candle, of course, they'll be able to trail that to break even. So almost a risk-free trade, looking good. So another dollar pair that's really motoring nicely for us. Looking at USD Cad, not so much here in the inside of this HTC channel on the weekly time frame. We've commented before how that support level was respected, so nothing for us to look at there. But of course, Friday we got that bullish breakout of the HTC channel on the daily time frame. So anyone looking to trade on the H4 time frame, and you're purely a channel trader, then obviously this would be all systems go. But likewise, so far this morning, we haven't yet had a pullback. Market's been pretty aggressive. But if you're trading the lower time frames, down to the M30 and even M5 time frames, this has also been keeping you somewhat busy. Right, so Aussie and Kiwi, so weekly time frame again, we've just got this that dollar strength obviously giving us last week another but a very strong bearish impulse candle deep inside of our HTC channel. So this isn't useful for us as a setup time frame or selection time frame. So we dropped down to daily. The difference here, basically, apart from the fact that it looks like we may well be getting a breakout during the course of today below our H4 HTC channel, is the fact that it is a class 1 M pattern. So those of you who are purely pattern traders have been trading this already since Friday on the lower time frame. So dropping down to H4, you'll notice we had that phase 2 breakdown in cyclicity over here, a class 3 hybrid setup at the end of this candle, no question about it. What time was that? That was midday to 4 p.m. on the 21st, on Thursday. So anyone who took a hybrid, this was a massive one, and you're still in that trade. So just to show you the benefit of hybrids, because they often don't work out, very often don't work out. Well, I mean, we'd be using advanced targeting typically on them. So let's just have a quick look. Our initial stop on this would have been in the region of under 30 pips anyway, but let's call it 30 pips. And you're looking at 277 odds. So we're approaching 10 to 1 should we get out at that price. So a very nice move here on the Aussie for hybrid traders. Just jumping back briefly, you'll notice though that that's the only setup that we've had. This US dollar strength has been really quite tremendous since the market broke on Friday, basically. So that really is pretty amazing. All right, so let's look at what the Kiwi is doing as well. And remember, folks, when you're trading all of these, you need to be careful that you don't overexpose yourself to any one currency. Similar picture on the weekly time frame. Nothing for us to do there in terms of selection, but that very strong bearish impulse candle on weekly looking like this on daily. And again, we've got a class 1 M pattern, but we've also been outside of the channel a bit longer. So our HTC channel having been breached already on Friday. For those folks who are looking for the hybrids as well, you can see that the potential for a hybrid was there with a potential class 1 M pattern. So we need to look at what the cyclicity looked like during the course of this retracement wave, which was in this region over here. And again, you can see where cyclicity broke down in this region over here. There's that 55 EMA again, folks. You know how many times I've mentioned that. Now, the higher time frame phase 2 will often come to an end at the lower time frame 55 EMA. In fact, you can see it's happened repeatedly. Well, certainly there, touched it perfectly. And there's quite a few pairs where it looks like this as well. So breakdown of cyclicity over here, no question about that. Unfortunately, not quite as good an entry if you're waiting for the impulse candle. But nevertheless, a good opportunity to get in there. But no other entries for the impulse traders. We may be getting a pullback now with this bullish engulfing here on the H4 time frame. So do keep an eye out for that one. Right, so that's the end of our majors and minors crossed with the US dollar. Here we have our yen crosses. And as I mentioned, you know, this is something that we've stepped back from now last week. And here on the weekly time frame, you can see how euro yen, well, actually, it's already this morning. In fact, just at the start of the week, we've got this bearish candle. But if we look down at the daily time frame, you can see that during the course of last week, this already started on Wednesday, similarly to what we saw on the USD JPY. So we are technically still in a trend here on the daily time frame, and you can see right now it's testing the support level, which is the top of our HTC channel. Let's see what happens there. If this comes to an end, and of course, if you are a hybrid trader, you're looking at this bearish cyclicity, which is still very much intact. But should it break down, that, of course, will give you a clue for a potential bullish resumption. And across the yen pairs, quite frankly, this is quite a common picture. You'll see here GBP Yen, that high test, obviously a little bit more obvious when it comes to the breakdown of cyclicity, potential breakdown in cyclicity. And of course, here on daily, you'll see that it's pulling right back inside of our HTC channel here this morning. So a significant pullback, and again, that having started on Wednesday. And on most of our bullish trades across the yen pairs, we were kicked out on many of these retracements. In fact, if you're using the 3-6 rule, that candle there on GBP Yen would have stopped you out. But still, some very, very nice winners that we were able to pull out of that bullish market. And as I say, similar picture across the yen pairs. Here, Swiss yen on weekly. And this now today already, it's the start of the week. But unless we get a very strong bullish resumption, it looks like that that high, I beg your pardon, may be ringed. So a likelihood then of this turning into a phase 2. And you can see that the cyclicity did break down over here. If you are trading overlays, then the overlay entry, well, depending on if you're waiting for the impulse candle or not, If you were, actually, then there was no setup. If you're more aggressive and you took the entry as soon as that high was ringed, you would have entered open on Friday. So you'd still be in that trade, and it's working out pretty nicely, it looks like, for an overlay. Right, CAD Yen, inside bar so far today. Also a bit of an inverted hammer here on weekly, still in a phase one, unlike that GBP Yen we just looked at. And as I say, similar picture here. All phase two. So if you're a hybrid trader, there's no sign of a breakdown in that cyclicity. This looks very aggressive in terms of the change in market sentiment that we've observed in the latter part of last week. Right, Aussie Yen looking like that rings now, a high being ringed. Obviously that telling us that potentially at the end of this week, we'll be able to call the end of this bullish impulse wave. We did note previously that we've had two inside bars over here that, of course, being a bit of a symmetrical triangle, and therefore this being a false breakout. And if you look at the daily time frame, there's that symmetrical triangle, bit of a fakie there, obviously, and pulled all the way back down, straight deep inside of our HTC channel, and potentially giving us a bearish impulse wave following that bullish impulse wave. So an aggressive reversal taking place right here and now. Right, last of the yen crosses, obviously, Kiwi Yen, same picture, very similar on weekly. Also a bit of a symmetrical triangle and a bit of a false breakout and coming all the way back down again. So something that we've stepped back from completely. With the yen pairs were very good to us, let's face it, folks, over the last month or so. We've done very well out of that. Right, so looking at the euro crosses, euro GBP, nothing doing for us here. You can see how that GBP weakness last week showed itself, though, here on daily. We just pulled straight back inside of our HTC channel on the daily time frame. So it's strong movement, but obviously there are other pairs where we're more interested in trading those. Euro Swiss, likewise, euro strength against the Swiss franc here with a bullish impulse candle, but deep inside the channel, no pattern. Same thing on daily. All right, so just move more quickly through these that we're really not so interested in. Euro Cad, we had this bullish candle last week. If we were to have the weekend now, of course, this low has been ringed. So unless we get a bearish assumption giving us a lower low, which would mean that high is non-relevant, this low may well end up being ringed by the end of this week. Which means we would go from this bearish impulse wave into a bullish retracement. So, but it's not something that we've really been interested in. There hasn't been much for us to look at. You can see here on the daily time frame, it's been messing around with the support level. So it ventured slightly out of the support level last week, Wednesday, but it's pulled straight back inside of that. So nothing of interest for us there at all either. So we move rapidly on. Euro Aussie, likewise, here on the weekly time frame, you can see how the support level has been respected. And last week, giving us finally a ring on that low. So the inside bar not being enough for that the week before, but certainly last week's bullish impulse candle did that for us. So that bearish trend is over. So this is phase two, and we're back inside of the channel. So nothing to do here either. On the daily time frame, though, all of that bearish cyclicity having now come to an end. And by the way, you can see we did have, as we discussed last week, we had a couple of bearish trades that got taken out, obviously, at break even on Friday. That's fine. No problem with that. We'd already hit the take profit on a standard target a couple of weeks ago on that setup. But all of the cyclicity now having come to an end. And now you can see we've got a potential bullish breakout of our HTC channel here on the daily time frame. So keep an eye on that. But again, we need to be judicious about how we budget our risk. So Euro NZD, similar kind of picture. We've known before that this was over. That low was ringed already a week ago, but this bullish impulse candle on weekly confirming that. But obviously on daily, we have now an actual breakout here on the daily time frame. So if you're looking for trading opportunities, with daily being your selection time frame, then Euro NZD may well be for you. So dropping down to the H4, you can see how through the course of so far this morning, we've had 3 4-hour candles so far. The last one being quite a strong pullback, it has to be said. But nevertheless, if you have all of your criteria met, then that's and this is on your shortlist, that would be one that you can consider. Looking at our GBP crosses now, GBP Swiss, almost the same as Euro GBP, but an inverted version of it. Nothing of interest for us here on the weekly time frame at all. You can see that we have seen this GBP weakness coming through, however. And that's what it looks like Friday and today, the market's plummeting. So, as I say, we've got other things to trade, but it's interesting to see how these correlated pairs are looking as well. But a pullback straight inside of our HTC channel, no valid patterns either. Certainly much better to look at something like GBP Cad, where we've got an established trend on the weekly time frame. So last week ringed the preceding high, bringing to an end that short retracement wave. So this therefore being valid through the course of last week as potential setups for a daily hybrid. And now, of course, that high has been ringed, we can be looking for H4 daily impulses as well. So hybrid traders, if you were trading, that was a class 4 pattern. In fact, the hybrid and the H4, I beg your pardon, hybrid and the impulse traders are going to end up with the same picture. So we now have a class 2 M pattern over here. So unfortunately, we didn't get a bearish impulse candle, unlike the picture that we looked at with the Euro USD, where we haven't actually been given one here, and the market has broken out of that HTC channel this morning. So should it stay outside of this channel, we'd be able to trade this on the lower time frames. Right, GBP Aussie still inside of a retracement wave over here, just showing us that the Australian dollar is even weaker than the pound. So, and that's saying something at the moment. It's testing that resistance level. It is a bearish trend on the weekly time frame, but we're in a phase 2 of that trend. So the only thing that this would be useful for is a continuation trader. If you're trading single time frame continuation entries on the weekly, well, good for you, but we prefer the hybrid. So you can see here on the execution time frame for a daily hybrid, that this bullish cyclicity is still intact, waiting for a breakdown in that before we could look for a bearish trade, and nothing on the lower time frames. Last of our GBP crosses, GB NZD, similar, but even more so, well inside of the channel here. So not quite as sexy for us. We did get a marginal impulse candle last week, following on from the previous week's impulse candle. But you can see here on the daily time frame, what it's doing is it's testing this resistance level here on HTC, the upper boundary, the HTC channel, and it has been doing it now, well, going on 2 weeks. So definitely not one of our favored pairs at the moment. All right, so let's look at the other crosses. CAD Swiss on the weekly time frame. Yes, it is a bit of an inverted hammer, but it did close outside of the channel. Let's see what happens after this. It also, I think we did talk about this last week, give us a class 1W pattern. We didn't have any closes inside this retracement wave inside of our XA leg. Excuse me. All right, so dropping down to the daily time frame, you can see how that was a very clear breakout of the HTC channel. But then we've had since Thursday, we've had this pullback, and today it's testing this support level, which is the top of our historical Donchian channel. So let's see what happens in this area. Again, if you are a hybrid trader, you'd be looking at this bearish cyclicity, which is still intact at the moment. Should you have a breakdown in that, then you do have a potential bullish hybrid setting up at the moment. And should, of course, we get a resumption, in other words, should we get a ringed low over here over the next couple of days, then this is definitely a tradable pair for H4 impulse and the other lower time frame strategies, trending strategies anyway. All right, so Aussie Swiss weekly time frame. I haven't progressed this analysis, obviously, because having done this on the weekend, but you can see that today it looks like we're going to have this high ringed. Either way, we're really not interested in this. Potentially with that low ringed by last week's candle, in principle, we could have started looking for bullish setups on the daily time frame, but of course nothing like that has been happening and giving us the opportunity to do that since that's happened. So in fact, exactly the opposite is happening. It's giving us a bearish breakout on the daily time frame. So that's a good one for us to leave alone as well. Aussie Cad deep inside channel on weekly, but obviously this is we've had 2 bearish impulse candles in a row, which means that we should look at the daily time frame, and that looks like this. Class 1M pattern, we've had it now for well, since last week. Well, basically this high got ringed on Thursday last week. If you were looking at that retracement potentially giving us a class 1M pattern as a hybrid trader, then that is something that you would have looked at in this region here. Looking at the cyclicity, breakdown in cyclicity, here was the entry. I know a few folks who took this, including this trader. Very nice win. Obviously, if you were using standard targeting, your take profit has definitely been hit. But if you're using any kind of advanced targeting methods, or not the aggressive methods, but if you're using, for instance, the 3-6, then there's no way that's, yeah, you're still very much in this trade, although you wouldn't be that far down because that's a higher close. In any case, there's lots of scope for this, and this trade is definitely doing very well at the moment. Right, so that's Aussie Cad, and then Aussie Kiwi. So we spoke about this last week as well, how we've had this general upward ticking movement. We've had 1 or 2 impulse candles along the way, but with pretty long wicks, which means that the cyclicity on the daily time frame has looked pretty weak. We did get that old trade previously. We didn't take anything else on this. Had you taken a trade on this with a daily impulse, wouldn't have worked out, but I think you would have maybe lost about 1/3 of your original risk on that one, so not too bad. And of course, this is also a very good example of an overlay, which actually would have hit its take profit already. But a nice setup with Friday's candle, definitely ringing that high, definitely bringing this bullish cyclicity to a very clear end, and a bearish overlay would have hit take profit already today. So not something that we've been paying much attention to in the last week or two. Right, Kiwi Swiss also inside the channel, another one where you could see that looks like this high is going to be ringed this week. We were potentially looking at this obviously as a class 1W pattern. That is already over with a lower low here. So obviously a bearish inverted hammer is a bit of a warning sign that is going to be a retracement wave. Looks like it's turning out that way. But early days to make a conclusion on that, though. We've got the rest of the week to look at that. But here on the Kiwi Swiss daily time frame, you can see how the bottom of our HTC channel continues to be respected. Bit of a gap over the weekend. Did get that retracement. Yeah, so the jury is very much out on this. There's no reason for us to trade this pair at all at the moment. And folks, remember, selection is such a crucial part of being a successful trader. If you're looking at the daily time frame, bit of a different story over here, where we know we had a breakout previously. This was quite a nice one, where obviously now with last week, we had that retracement, short retracement, giving us a bearish impulse candle. That was obviously a setup if you want to trade this in a bearish direction. The only thing is, for a daily impulse, obviously we wouldn't be looking at it because of the selection time frame, nothing doing there. Which is a pity, because that's a really, really nice setup for a daily impulse, just looking at this time frame. But what it does, of course, give us is the ability to drop down to the execution time frame. And again, you know, this is a retracement in an established trend. We would have looked for a breakdown in the cyclicity, which was in this region here. And that took place literally with this candle right here, which was the midnight to 4 a.m. candle on the 21st, Thursday morning. And opportunity to get in there, and that of course again would either already hit your take profit with, I think it would have, with standard targeting. Just need to double check that. What's the ATR here? 133. So where were we? Yeah, no, actually, so standard, this trade would still be running either with standard or advanced targeting. So nice one though, definitely a nice setup. And if you are waiting for the H4 impulse, was that in the end the same one? In fact, it was. Let me just confirm that for you folks. No, I beg your pardon. So H4 impulse, you would have needed to have waited until Friday. And your first opportunity would have been this bearish impulse candle over here. And part of that, you would have survived that pullback. And this one should have, let's just double check that. What was our ATR here? 69. If you're using standard targeting on this one, then no, also waiting for that one to hit take profit. But you would have definitely been able to reduce your risk on it. So yeah, well, at least partially anyway. But you'd still be in this trade in any case. A nice one, definitely a nice one. Although, of course, looking at those US dollar pairs, some of them are much more spectacular. All right, so let's go and have a look at what gold is doing. Well, much of what gold did last week obviously happened later in the week, which we can have a look at here on the daily time frame. So there you can see, well, actually Tuesday, Wednesday, Thursday, Friday, and today giving us a nice bearish pullback. It's very much inside of our HTC channel here. We were potentially looking for a resumption in bullish cyclicity. I think we discussed this before. That obviously broke down early last week. Here on the weekly time frame, we've also got potentially, well, actually, I would treat it already as a breakdown in the bullish cyclicity on the weekly time frame because of this bearish engulfing candle from last week. So unless we get a very aggressive resumption during the course of this week, giving us a higher high, which means we'll be able to treat these lows as non-relevant. I don't even think we'll be able to do that actually, because we've already got this lower low today. As far as I'm concerned, that bullish cyclicity on weekly has broken down. So just wanted to cover that because I know a couple of folks have been looking at gold. Here we go with the Dow bearish engulfing candle last week. Lots of bearish movement across the stock markets, and most of that coming through on Friday, starting on Thursday. And yeah, definitely tested that at the top of our HTC channel. So from a technical perspective, you can see that is still held true. And then we had that very aggressive bearish breakout. So if you're trading this at all, you want to be trading it on the lower time frame, looking to short the market. And we haven't even been able to get in. So you can see this has just been going south that whole time. The only pullback we had was a bit too soon. It was inside of that channel. So not able to do anything there. Besides, the Dow is not our favorite one to trade. But better would be the S&P 500. So here also you can see on the weekly time frame how we've had 1, 2, 3 bearish engulfing candles now. So that's for the eliticians out there looking. This is looking very much like a potential wave 1 on a bearish 3-wave pattern. And here on the daily time frame, bearish breakout a bit sooner. So that was Thursday. We've got the outside close, no valid pattern. So you'd have to purely be a channel trader to look to start trading that. And here we did get that set up to short the market. And that was at 1, 2, yeah, that was on Friday. So quite late on Friday, obviously. And if you're using standard targeting for your H4 impulse, that's obviously hit take profit. Otherwise, you are still very much in this trade with your trailing stop. And similarly on the Nasdaq. So also 3 bearish impulse candles on weekly, regardless of anything else. But this would be our selection time frame, being daily. And again, that outside close last week, Thursday, giving us a heads up to trade this on Friday. Unfortunately, it really took off like a rocket and didn't give as nice a setup as we saw on the S&P, which of course is why it's good to look at trading both. Right, so those are the indices that we're interested in. Looking at oil, you can see the price has started coming down last week and already even more so this week. I beg your pardon, this is the daily time frame, but yeah, it's even so. You can see how Friday we did have a ring high. We're still very much inside of the daily channel over here. On weekly as well, you can see that we look like potentially we've already had a breakdown, the sequentiality of cyclicity, but that's definitely looking like this price movement is going sideways. Remember, when we have a breakdown in cyclicities, we look at the 3 R's, the first of which is range. So it looks like that's conforming very much to the ranging principle on the weekly time frame. And nothing for us to do on daily either. So we're leaving oil alone. And Bitcoin, likewise, not really doing anything interesting at all. It's holding around the $40,000 mark. which is fine. Looks like we might be getting a bearish breakout though on the daily time frame. Let's wait and see. If you want to trade this on H4, then let's wait and see what happens today. If we do get this bearish breakout, then trading that bearish continuation using our lower time frame strategies may well be beneficial. But yeah, this is not the cheapest one for us to trade either. So it's not top of our list. Right, so last but not least, we've got our US 5-year treasuries. Last week giving us another continuation. We spoke about the preceding week's engulfing candles. Actually, I call it bearish. It's a bearish inverted hammer. I call it bearish because of the fact that it closed in the bottom half of that candle. A lot of people would argue with that because it closed above the open, but that's marginal. Far more important is the fact that it represents lower time frame cyclicity, and on the daily time frame, you can see how that bearish cyclicity resumed very nicely. That over there was an obvious bearish daily impulse for us, which we took, and it hit take profit on Friday. So there was also some H4 action, and also just managing, I see, to get through to that take profit level. We had 2 H4 impulse trades over here, both of them comfortably hitting take profit. So as you can see, 5-year US Treasuries has been really great for us for quite some time. Let's wait and see what happens in the daily time frame. You know, we are seeing this resistance level being tested as we speak. It's early doors, but you never know. We might at last be seeing a reversal on this. So there might be a rush to security. People used to use US Treasuries as a safe haven destination. That's less the case now, I think, than ever before, with the Reserve Bank having printed so many trillions of dollars, which ultimately, in effect, is still default. If you pay people back with money that's worthless, that's still default. All right, so something that I think the folks of the Reserve Bank in the US haven't yet tweaked onto for some obscure reason. All right, folks, so that's it from me. As always, if you've enjoyed today's training, then please do hit that like button. If you've got any questions for me, pop them into the comment below and I will answer it personally. And if you're not subscribed, make sure you do that and hit that notifications bell. All right, folks, as always, make sure you limit your downside so that you have an opportunity to maximize your upside, which makes you a convex trader, and also ultimately you cannot lose. Folks, I'll chat to you later in the week. Bye for now.